The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, happy 4th of July. I'm Esther Gulius, the tax lady. Who would think that I'd be talking about the end of tax season 11 days before July the 15th? I mean, what a year we've had. This has sure been a roller coaster ride. And we got 11 days before July 15th when your returns are due. Your money is due. More than anything, your money is due. Because if you just can't get your paperwork together, they will give you an automatic extension. But the automatic extension doesn't extend the time to pay. So July 15th is the time when you got to pay those taxes. And I got in studio Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy 4th of July. And
Yeah.
Christopher Fabian.
Hello, Esther.
Hello, Christopher. So you guys have a full dog house, right?
We do. Well, 2 dogs. Next weekend will be 3 dogs. Yay, us.
Oh, boy.
Well, that's what happens, right? When you love doggos. And I hope everybody's having a wonderful 4th of July. I know.
Do you have
I
a TV
looked up
on? Is there a TV on?
I looked up all kinds of things that people say about the 4th of July. I'm very patriotic, as I know Tiff and Chris are. There's really nothing that you can say that could put more emphasis on how important the preservation of our country is. There's just no words to say. I've looked up all kinds of things from all kinds of people, and going from George Washington, Martin Luther King. But the bottom line is, I just hope everybody appreciates the wonderful country that we have. I know I do.
Yeah. I've been fortunate to have the ability to travel all over the world and some places. And I got to tell you, we are very blessed in this country.
We are, and sometimes I think it's because we're so blessed that we kind of take it for granted. Other cultures are fighting for things that we have that is part of our the fabric of our society, and it's so sad to watch people think that they can just burn it down. And I mean, we're not perfect. There's all kinds of things. I have all kinds of friends of mine that I love, that certainly there's been tough roads ahead for them, as all cultures. I come from an Italian background, and they call them a WAP and all kinds of stuff, right?
Yeah,
Yep.
yeah.
I mean, I was a woman. I remember when I first got my first job with an international tax company, and I was the only woman hired, and they said all kinds of disparaging remarks. I mean, we've all come through tough times.
Yeah,
just
the
think-
person who's my office right next to me, our right hand person, is Native American. I mean, there was somebody who was giving her grief the other day, and she's like, "Oh, don't you dare! I'm a Native American. Don't even go there."
I mean, our country was forged in chaos. But if you think about the Pilgrims and all the first settlers, they came to fight for freedom, and I think we've forgotten about how important our freedom is. But anyway, I don't mean to wax nostalgic, but that I love the United States, and I'm thankful for everything.
Yep.
Right?
Yep.
Well said.
Okay, but we do have 11 days.
And we're live in studio.
Yep, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-803-0930 with a wonderful weather. I mean, in Western New York, when you're of course, winter was great this year, too.
I don't remember
It's
it.
just been, there was no snow. I mean,
I know,
for all
I'm
intents
just-
and purposes, there was no snow. And then here we have this wonderful weather. I know if you don't have air conditioning, you're probably cursing what I'm saying, but it is awful great to have all this wonderful weather in Western New York. So 8030930, 8030930, star 930 on your cell phone. If you're out cooking your hot dog, 716-8030930 is our text line. Okay, so 11 days to go. Even if you've already filed, you can still look at putting money into an IRA or an SEP, right?
Right. You have to July 15th to get that accomplished.
And why would you want to do that, Chris?
To bring down your income.
Your tax bill. So basically, it's like especially if you have money in the bank account, if you move the money from your left hand to your right hand, you move it from a savings account to an IRA or a simplified employee pension, you then create a deduction and you get a tax deduction for that.
And you keep the money.
And you keep the money. So it's like, and if you've already filed your return and you do this before July the 15th or on July the 15th actually, you're going to get a refund because you can file an amended return and get extra money back.
Right. Yep.
Okay, then the second thing you should do in your 11 days is double check to make sure all your income is included on the return you want to file, which includes sales of stock. Now, what do we see with people with sales of stock?
That too often they don't, unfortunately, know how to read the 1099-B and DIV and INT.
I didn't sell any stock.
Yeah.
No,
yeah.
you didn't. Your broker did.
That's right.
And if your broker sold your stock, you got to put it on your tax return.
Right.
And if you don't,
the IRS will send you a nastygram
bill.
and say that it cost you nothing and you got it for free.
And then they give you a nastygram with this big bill that you shouldn't have done. So make sure you double check your income and make sure if you have a stockbroker that sent you this big fat form at the end of the year, that you include the sales of stock and make sure the cost basis is correct. Now, why would that be important?
Because an incorrect cost basis could mean more tax you pay.
More
Yep.
taxes. So the cost basis means like this is what you paid for it. So you might have paid $1,000 in 1970, but then you had reinvested dividends of $10,000. That means it isn't $1,000, but it's $11,000. So if you sell it for $12,000, it's a $1,000 gain as opposed to an $11,000 gain. So that's really important that you keep track of your cost basis to reduce your tax liability.
Right. And not to mention, you should also check the date acquired. Because, if you inherited it and they're using the wrong date.
Well, by the way, I heard the other day when I was listening to Biden, he says he's going to get rid of the stepped-up basis.
Oh, well, that just means everybody's paying tax on.
That's right. Wow. Anyway, I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. If you got any questions, we'd love to help you. We're going to take a short break. We'll be back on the other side with your questions.
Can you see by the dawn's early light what so proudly we hailed?
Hi, this is Esther Gulias, the tax lady. Happy 4th of July. We're thankful to God for the United States. Makes me cry.
Amen.
That kind of song. Anyway, let's go back to we're going to go to the phones. We're going to talk to Kevin. Hey, Kevin, how can we help you, sir?
Hi, Esther. How you doing? Hi, everybody.
Hey.
Hello.
Hey, Kev.
Tiffany, I'll see you Monday.
Esther, I'll be there.
What I did, I took $2,500 out of insurance thing, and I have to pay it back. Am I still going to get charged on my taxes? Tiffany can answer this one.
$2,500 insurance.
All right, so you took $2,500 out of what kind of an insurance policy, Kevin?
Insurance policy.
An annuity?
What kind of an annuity?
Was
it health? Was it life insurance?
Just a health insurance, not annuity, but just insurance policy.
For what kind of? Was it for your life or was it your health?
Life.
Life insurance. Okay. So generally, the money that you would take out of a life insurance policy, unless it's an annuity, would probably be mostly tax-free. Because usually the premium that you're paying is more than the benefit you're getting. So what I'd suggest you do is talk to your insurance company give them a call and ask them how much of that $2,500 is actually taxable, of which they're going to send you a 1099-R form when in the year you received it. Was it in 19 or 20 that you got the money, Kevin?
19, Esther.
Did you get a 1099-R, Kevin?
I think I did. I'm not sure. I'll talk. I got a meeting with Tiffany Monday, so.
All right, she'll take good care of you.
Are you
Kevin.
doing anything fun today, Kev?
You know, I'm coming home from the park with my yellow Labrador Retriever.
Oh, I was talking to one of my friends, Rich, and he's out taking a hike today, a couple-mile hike. So today must be a day for just, enjoying the scenery and enjoying the sunshine and the breezes, and just a great day for doing that sort of stuff.
Right. I mean, we're so thankful that we have such great weather.
Great.
Thanks for calling, Kevin. We'll see you Monday.
Good day
All right.
for a walk.
Happy 4th. Okay, let's go back to our list here of things. And again, 8030930, 8030930, star 930 on your cell phone. To go back to Kevin, what ends up being taxable on an annuity, a life insurance policy, would be your after-tax dollars. So if you put in $10,000 to a life insurance policy, and there's a cash surrender value of $2,000, and you put in $10,000, then there would only be like a $2,000 potential gain, depending upon how much they've already calculated would be your after-tax dollars. So you have to talk to your insurance agent, who will tell you how much of what you would take out would be taxable. The great thing about a life insurance policy, it's a great way to take money out that a lot of people don't think about, that would be tax-free, right?
Right. That's right. You can, you got to use what you have to your advantage.
So if you have a life insurance policy and you have a cash surrender value and you're feeling tight and you're thinking that you'd like to take money out of your IRA or your 401k, look to your life insurance policy first.
Yeah, that's a really good policy.
In most cases, it's going to be mostly tax-free or totally tax-free.
I know the other day you helped me with the question because we were busy we were busy and I was busy and you were helping me. And there was somebody who wanted to use the CARE Act and she wanted to take a lot of money out of her 401k to pay her debt. And you're like, why? Why? Don't do it. I mean, so solutions like taking money out of your life insurance or home
because
equity
even
or
though
loan.
Because of the CARE Act, you're not going to have to pay a penalty if you're under the age of 59 and a half for taking money up to $100,000 out of your 401k. It's still taxable.
Right.
So you don't have to pay a penalty, but it's still taxable. So if you're in the 20% bracket and the state of New York 6%, you're going to pay 26% on the money, which is $26,000. If you take out $100,000, that's a lot of money. And people think it's like a walk in a park. Oh, because I'm taking out this money. That's my money. You should not do it. It's holy money. Your pension money is holy money.
Yep. I love when you say that. I've used that so many times.
True.
Yep.
We got a text.
We do. We've got a text, and it says, Esther and gang, is my daughter's scholarship money taxable on her return? I might have done this wrong.
Well,
It depends.
Is scholarships taxable, you guys?
It may be.
It depends.
If what?
if it was for books and supplies, it probably wouldn't be.
Right. For room and
Tuition.
board, it would be. Tuition, no.
Supplies is not taxable.
Right. Now, the worst
Room
part...
and board, yes.
Room and board is, and so that would mean the scholarship money would go on the kid's return who was claimed as a dependent, and right now they're getting hit with the kiddie tax, so it would cost them a lot of money. Now, if you put it as taxable scholarship when it was really for books and supplies, it wouldn't have to be taxable, and so you'd want to amend it if you did make that mistake.
So the thing is, if the scholarship paid for her tuition, books, and supplies, it's tax-free. If you have included that as income, you made a mistake.
Right.
If you included it on your daughter's return, you made a mistake.
Yeah, and a lot of...
For tuition or for other, like, for athletic kind of things that aren't covered, that don't have anything to do with her degree, that's going to be taxable. So it all depends on what the scholarship covered, and if you want help,
I
you can
know.
call us Monday at 632-7886, and we'll be very happy to help you. Or you can email me at egtax.com.
I was doing somebody's
and
tax
Hotmail
return, and they used TurboTax, and TurboTax just had them key in the information on the 1098, and so garbage in, garbage out, and so
Right.
actually she
Because
went
you
to the
don't know.
school, and the
you don't
school
know.
said, "Here's a billing statement. I think you need to go see a professional because I don't think you're looking at this right." So a lot of the times the 1098Ts will be misconstrued.
Misleading.
So
Yep.
the 1098T is what the college sends to you, mom and dad, or actually it sends it to your kid. The kid many times thinks, oh, good, this is a credit I get to take. But the truth is it should go on mom and dad's return,
Correct.
right?
Right.
And
Right.
so you have to kind of peel that off from your kid's hands, cold fingers, and say, let me look at it because it really should go on our return. Mom and dad would get up to almost $3,000 in credits. The kid would erroneously get $1,000. So, and I say erroneously because the kid shouldn't get the credit.
Right, right. And, also, if they did put it on the return, on line 7, on the kid's return, that could cause a kiddie tax for them because that's considered unearned income where that child would have to pay on the parent's tax rate.
Right, and you may not have it right now, but in a couple years it comes down the pike. Before you pay it, give EG Tax a call. We'd be happy to help you.
Right, right.
The other thing is, and again, 8030930, 8030930, star 930 on a cell phone. Our text is 716-8030930. And I hope that lady that texted us, or that person that texted us, will call us so we can go over all the figures.
Right.
Right?
It's very complicated.
All right, let's talk to Loon. Loon? Mike. From
Hey, Mike,
Houston.
how can we
Hey,
help
Mike.
you?
Looks like Loon to me, but you know that typing. Okay, Mike, how can we help you, Mike?
Yes, can you hear me?
I can hear you.
How much money and/or assets received in the will are taxable?
It all depends on the type of assets, and I don't mean to beg the question, but if it's cash that you're getting from the estate,
Well,
then it's going to be completely tax-free. If it's an annuity, if it's a pension, if it's stocks, bonds, or real estate, it may be partially taxable, if not totally taxable, depending upon what type of asset you get.
Okay, what if it was just cash?
Then if it's plain old cash from a savings account that grandma and grandpa had, it's completely tax-free.
Okay, because I realize, it's complicated because everything, you have to probate it first and everything goes to pay the debts out, and all that.
Well, if it came out of a savings account, it's tax-free.
But if there was like IRAs,
That's different. That's not out of a savings account, that's an IRA. Now, if the estate paid the taxes on the IRA, and you're then getting the
Right,
extra
are you-
tax dollars, that's different.
Yeah, that would be what Esther's saying is, did you get the check from the estate or did you get the check from the IRA company?
well, the person that I'm talking about didn't get anything yet because the will has to be probated, but,
Okay,
Just
so
rested.
if there's IRA money, somebody's got to pay taxes. Either the estate pays taxes, or the person that gets the IRA is going to pay taxes. One or the other.
And I think
so if there's
stock-
just a savings account, it's not going to cost you anything. If there's an IRA or an annuity, stocks or bonds or real estate, somebody's going to pay taxes.
okay, well, the best question is to contact someone then.
Yeah, just give us a jingle. There's no call. There's no cost for the call. 632-7886. We'll be very happy to help you, and we'll solve that problem for you. Okay?
Thank you.
Yeah,
Thank you,
so
sir. Thanks for
to
calling.
reiterate, it depends on what the
type
money
of
that you're
asset.
getting consists of. And so you really, like Esther says, I like when you say this, you got to peel back the layers to find out all the details.
Yeah, I mean, if somebody just had strictly a bank account, that's all after-tax dollars, so you get it tax-free. If they had it in an IRA that was a traditional IRA and nobody paid taxes on it, okay, then it's going to be fully taxable to the estate, to the person inheriting it. If it's an annuity and grandma and grandpa or whoever maybe paid $100,000 in taxes on the annuity, but there's been appreciation of $20,000, then the $20,000 is going to be taxable. So it all has to do with who what is the type of asset, and did the estate or grandma and grandpa pay taxes on it before? And we're happy to help you. There's no charge,
Right.
right?
Yep.
Okay. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break for the news. We'll be back with your questions on the other side. Happy 4th of July.
And I'm proud to be an American, where at least I know I'm free. But I won't forget.
I love that
the men
song.
who died.
I'm Esther Gullius, the tax lady from EG Tax. You know, we talk about taxes all the time, and our business is helping people to reduce their tax liability, but I am proud to be an American, and I hope you are too. And today we're thanking God for the 4th of July, our Independence Day. And I was watching something on TV today where they were interviewing people, and they said, you know, what does the 4th of July mean? And they were saying they thought they were independent from the Civil War. I mean, somehow people didn't get it, that it was our independence way back at the founding of the United States. So hope you're having a great day with your family. What a wonderful day. I can remember how many picnics I've planned on the 4th of July, and the weatherman will say, it's going to be 80 degrees, don't worry, and it rained. You know. But today, what a perfect day.
Oh,
right?
my gosh, yes.
So I'm joined in studio with Tiffany Fabian, Christopher Fabian, 8030930, 8030930, star 930 on a cell phone. We have a text that came in.
Yep, there's a text, and it says, Esther and gang, I live in New York. My home is in New York, but I work in Pennsylvania. On my W-2, I'm doing my return. It has Pennsylvania withholdings. This is a new job. How do I do my return, Esther?
112R. Right?
Yep. Yeah. Unfortunately, you're going to have to do 2 state returns. You're going to do a non-resident for PA, and you're going to pay tax on that PA income. Then you're going to turn around and pay tax to New York on that same income, but like Esther said, the 112R you're going to do to get a credit for the tax you paid to PA.
Right.
So you're not...
So you're paying taxes to Pennsylvania because they're entitled to their due. But then on New York, they're saying, well, what a great guy you are. You're still living here. We want your other income. And they give you a credit for the taxes you paid to Pennsylvania.
Yeah,
So
I know, like,
Pennsylvania, New York,
Which you'll
and
still end up
federal.
paying more because there's like a 3% difference between
But it's
PA.
not that bad. At least you get something.
Right. And,
go on, Chris. I'm sorry.
you know, one thing I want to say too, speaking of different states, if you're a snowbird, whether you go down south or you go out west, and you have somebody else prepare your New York return, have somebody in New York review that return. Because
the New York return is it's one of the most complicated, except for California. It's one of the most complicated tax returns that there are. The New York return has completely different rules from the federal.
Yep. Oh, definitely.
You just did somebody who had somebody do it in Florida.
Arizona.
Arizona, and there was a mistake you found, a big mistake.
Yeah, they did not know how. They marked them as part-year residents instead of full-year residents for New York, and then they missed withholding on a pension, and then they didn't give them the pension credit or subtraction on the New York. Yeah, so I mean, they had them owing $4,000, and they only owed $100. So
that's a $3,900
right
improvement.
Right, and they've gone there for
that's what
years.
happens. You know, it's not that a preparer outside New York State is a bad preparer. I mean, New York State is one of the most difficult state returns you can prepare.
Yep. Oh, definitely. And that's why I know I have some clients, they call me up, hey, I moved and nobody wants to touch my New York. Can you do it for me?
That's true. That's why down at our Naples office, we do lots of tax returns because they're New Yorkers who moved to Florida.
Well,
And I think there's a lot of them. Recently.
you know, New Jersey's a really hard return too. I do a DJ in New Jersey, and so on New Jersey, you have to add back the amount that you paid, you deducted for health insurance. You have to add it back as income, and so you gotta. There's nuances with every state, and then there's
well,
also
especially when you take a look at New York State, California, and New Jersey, they're one of the high. Those are the three highest
Right.
tax states in the union. Okay, let's go to the phones, and we're going to talk to Jerry. Hey, Jerry, how can we help you, sir?
Yeah, hi. Well, thank you. First of all, thank you for taking my call.
Yeah, what can we help you with?
Thank you. Happy 4th.
Thank you, and same to you. My question is medical deduction.
Yep.
We've never really used it before, but this year we're coming up with some heavier medical deductions. Mainly, it's going to be dental work in the amount of about $25,000.
Okay, must be dental implants.
Yeah.
That does count as medical.
Yep. So this
Medi-
medical is going to be reduced by 7.5% of your adjusted gross income. So when you take all of your medical, which would include all of your dental, all your prescriptions, all your Medicare,
Your vision, your eyeglasses.
your health insurance that you paid out of pocket, your co-pays, everything, the medical travel, hospitalization, come up with a total, okay? Then you reduce that by 7.5% of your adjusted gross income. So if your adjusted gross income is $30,000, you're going to take off about $2,200 off of what you paid on the big medical, and the rest of it is your deductible medical. And to that, you're going to you're going to add your taxes up to 10%. Up to 10,000. Your interest, your casualty losses, your charities, and certain other medical itemized deductions for miscellaneous itemized deductions. And if that comes over the standard deduction, you save money.
Okay. Well, I think after your explanation, which sounds very good, but I think I'll leave it up to somebody in your office.
We would love to help you, but
Yeah.
we're just trying to help you.
If you do have all those dental bills this year, now's the time to get the new glasses or get whatever
Good
else
point.
done. Add it all in
what
this
year
year.
was it? 19 or 20 though, Chris?
Yeah, what year did you
Jerry?
It's going to be this year.
Yep. so-
20, right? So you have the rest of the year to load up your medical so you get the biggest bang for your buck.
Well, that sounds pretty good.
Good.
Okay,
And
well,
I hope you enjoy your new teeth.
Somebody does.
I mean, it is remarkable. Dental implants are remarkable, don't you think?
I hope they are.
Oh, you don't have them yet. Okay. I can remember, because I do have dental implants, and I can remember the first time I talked to my dentist, and I thought, my gosh, this sounds like I should be buying an automobile because the cost. But it is remarkable. Dental implants are remarkable.
And they have the mini ones that are so fast and quick.
Yep.
You know.
That's true. That's true.
Yep.
Okay, Jerry?
He's gone.
All right. And we got a text.
Yep, there's two texts. The first one says, any quick thoughts on filing an estate income tax? Also, the time limit that is involved. Thank you guys. You are great.
Oh, how nice. What does that mean?
Well, so probably, the estate, $600, and you're going to have to file an estate tax return. So
Yep.
if it's made more than $600 in bank interest, dividends, capital gains, then there's going to be a tax return that has to be filed.
Do
let's
your
back up.
apples and oranges
what would
analogy.
Make an estate, Chris?
The estate, there are two different estates. I'm going off of one of them, and you'll see in a second. There's the estate meaning, hey, government, I'm died. This is how much I'm worth. That's the 706, and that you don't have to file unless you're worth over $11 million.
Wow.
Or I should say 5 point something for New York State. Okay. Then there's the estate return, the 1041, that is, hey, government, I'm dead, but I'm still making money.
And so that would be left to an heir.
Correct.
To file.
Yep.
Right?
Yep. So that one has the $600 limit.
Right. And so if upon your death, the money that you left before it was distributed makes more than $600, then you have to do the estate return, right?
Right. And this is where planning goes in, because at $12,000, the tax rate is 34%.
Right.
So make
So
sure
you want to distribute your estate as quickly as
right,
you can.
and make sure you have beneficiaries
Right.
listed on, because if you don't have a beneficiary on your IRA, the estate cashes it in and is going to pay 34%.
Right, which is a lot of money, where you might pay 0% or 10%.
Yep.
So that's a lot of a big difference. And it's so simple to add a beneficiary. So if you're somebody that has accounts and you're getting up there in age, or anybody actually, adding a beneficiary is so important because in the event that you should pass away, the estate cashes it in, the estate could pay like 34% when maybe the person inheriting it would pay at 10. That's a 24% difference.
That's huge.
And actually, without the state of New York. With the state of New York, it's even more.
You're right. Right. So
Okay, let's go to, we have another text.
Yep, it says, "Hi, I am a small business owner. Can I still apply, receive the 600 federal monies?" I should the PPP.
Well, it's interesting.
Unemployment.
One of my clients
Unemployment, there we
just
go.
called yesterday, and yesterday she got a $20,000 loan from the SBA, and she got the EIDG, not the employee. So she didn't get the loan; she got the grant. So she got $30,000 yesterday. 20 of it was a loan. 10 of it was a grant, and they are extending the date. If you haven't applied for PPP, you can, and you have a business, you can still apply, and that applies to not-for-profits as well.
Right. And the 600 monies, Chris is right, that's the unemployment. And so the federal money for unemployment is set to go away. Is it mid-July?
July 1st.
July.
no, July 31st.
July 31st.
July 31st.
And so they could still apply for unemployment, wouldn't you think, Chris?
Yeah.
Absolutely.
Yeah,
Yep.
so absolutely. And I think that would be, and they'll also backdate it, right?
Yeah, you have to answer the questions very carefully, especially if you're self-employed. It says, "Have you talked to your employer?"
That's
How
why-
do I answer that one?
Well, that's-
I am the employer.
When I've done unemployment with people, I'm like, we got to be really, really careful, like hunting rabbits. We got to be really careful. You got to be really careful when you're answering those questions.
Yep.
Right. And if you need help, EG Tax is there to help you.
But
right?
yes, do it.
I mean, we help a lot of people with their unemployment.
We
yes.
do.
Yes, we do.
So, but the bottom line is, so this is small business owner. If you haven't applied for PPP, which is the payroll protection plan, you can still, those lines are still open, and you can go to the SBA or your bank, and you can still apply for the PPP, which in most cases is going to turn into a grant. So make sure you do that. But
And
right
you
now,
can
this
still apply for
particular
unemployment.
Caller, this particular texter is somebody that's looking for unemployment. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break, and we'll be back on the other side with your questions and texts.
We should sing it something like this. Listen here. Oh, beautiful, far, spacious sky.
Boy, I feel like just listening to that. You know, this is the 4th of July, and we are so blessed to be here. I'm Esther Gullius, the tax lady, with Tiffany Fabian, Christopher Fabian. We do federal stuff. We do tax returns. Our job is to make sure you don't overpay your taxes. That's our whole claim to fame. And but we are so blessed to be in the United States. And I hope that everybody that's listening, they are as thankful as we are.
Right. And, sorry, I know, like Tiff said, we've traveled. I mean, I know you've talked to people on our trips, and, is it in England where it's 40% straight up? There's a lot of countries in Europe, it's 40%.
Yep.
So, I mean, when people complain that their tax rate's so high and they pay 12%
Or 10.
or 10% or maybe nothing and they get the earned income credit.
Right.
I mean, there's so much.
I know there's a lot of complications in our tax code, that's true, but those complications are there to save you money. And you can do it, I can remember back 40 years ago when we used to shop our supervisors, and we shopped one of our supervisors at a company that I will not name, and she didn't itemize. She did a short form, and I called her up and I said, you know, we can't use you anymore because you just did a short form on a return that should be itemized. And she said, you don't understand. We want to simplify everything. And I said, well, but when you itemize for somebody, you save them money. It's not about simplification. It's about saving people money, and that's what we're about. At EG Tax, we want to save you money. And so it may be more complicated, true, but those complications mean we save you money.
Right.
And we're there. Through July the 15th. You don't have to worry. If you just call us at our corporate office at 632-7886, we'll make your appointment. For this last couple of weeks, we will get you done.
We will get you in, we'll squeeze you in, and you'll be happy.
Right. That's for sure. And then right after that, we're going to do our summer series.
Right, on the radio, just like we used to. We'll have like an estate attorney that we were just talking about. We'll have the bankruptcy attorney, the insurance, you name it, health insurance.
Right, that's what we talk about when it's not tax season, but it's been tax season forever here. And we started off in January. We're usually done April 15th. It's going to be July 15th this year. My staff has worked so hard, and we've really tried to serve everybody, especially in light of the whole COVID thing. So you're masked up and you're sitting far away and there are people in the parking lot, but whatever it takes, we're going to get it done for you, right?
Right.
Okay, let's go to Don in Cheektowaga. Hey, Don, how can we help you, sir?
Well, thanks for taking my call.
Yeah, what can we help you with?
Regards my stimulus payment that I haven't received yet, and when I go to the website, put in my information, it keeps on coming back. They don't have it. Is there any you can get around?
So call us on Monday or Tuesday, and we will go online with you and see if what we can find out. But one thing, and for everybody listening that didn't get their stimulus, when you do your 2020 return, you'll have another shot of getting what you didn't get. And even if you didn't get it because your income was too high, if your income is lower in 2020, you're going to get it when you file your 2020 return. So 632-7886, and
Yeah,
we'll have you done.
I do a conference
And
call
there's
with
no
the
charge.
practitioner line to check on the status. Did you go on the IRS website to check on it?
Yeah, that's the one I've been entering it on.
And what is it saying?
I haven't been. I've been putting in a paper form for a number of years. This is the first year I put it online. Does it make a difference?
That shouldn't make a difference.
Give us
No.
a call. We'll help you.
No, it shouldn't make a difference. It
No
should
charge.
speed it up. Actually,
Yeah, just give us a call on Monday, Tuesday. We'll call together and we'll get it figured out.
All right. And let's go to our
632-7886. The first text is there anything a 19-year-old can invest in reduced taxable income, full-time student, part-time employment?
Okay, well, first of all, their standard deduction is 12.4, right?
Right.
So
12.2.
12.2, excuse me. So they're up to, until they get to $12,200, they're not going to pay taxes. So it's interesting that you would say, is there anything that a 19-year-old can invest in to not pay taxes? They're probably not going to pay taxes unless they end up with a kiddie tax. And that would be the problem. And
right,
what I
or if
suggest
they're
you do
19,
is
yeah.
give us a call and we can go over everything.
Yep.
Yes, sir.
If the 19-year-old didn't go to high school or college and they went and got a full-time job, then, there's other opportunities there
But
too.
again, it's still 12.2, no matter
right,
what,
but if,
right?
Yep.
Right? But,
Well,
but
you know-
it says full-time student, part-time employed.
One of my clients has been texting me lately.
And they can put money into an IRA. All right, go on.
One of my clients has been texting me lately, and she wants to know if her dependent can put money into a Roth. And so I looked it up, and I talked to
They
Chris.
have wages.
Right, but what if they do have wages? Chris said.
They can put it into a Roth.
Okay.
Why would they want to put it in a Roth?
Right. Well, I'll have to tell him to call me.
You can put it into a Roth, and remember, a Roth is completely tax-free when you take the money out because it's not deductible when you put it in, provided you have wages or self-employment income. But you think about this 40 years down the line. Right now, with what I see with all the anarchy going on, God knows what we're going to have in a tax code. So you want to bet the fact that it's not going to be taxable 40 years down the line? Whatever.
Yeah. Another text says, "Hi, Esther. My son has been waiting 2 months for his first unemployment check. He got his acceptance letter in the mail and emails them every week as per instructions, but still nothing. Any advice?"
People are just getting so surprised because then they get this gigantic check. So have them not give up. And if your son wants to call the office, we will interface with him at no charge to see if we can help them to get his unemployment.
Right,
Yeah.
and make sure. I know they said they email them every week.
You have to certify.
You have to hopefully that means he's certifying every week.
Right. He has to go in and say that he's still not working, but he's looking for work. He's able to work. He's in New York State.
What's interesting, one of my clients the other day called and said, "Oh my God, Esther, I got $6,000 the other day. I've been so poor, and now I got this money."
Yeah.
And that's what happened. Just poof, it shows up. So don't give up. EG Tax is there to help you at 632-7886. You can go to our website at egtax.com.
And
All right.
call us. There's
14 not
another.
even 14 days. We got 11 days.
Want
right?
another text?
Yeah.
Hello, and wishing you a happy and blessed 4th of July. I am a New York State retiree, and I collect a New York State pension. If I move out of New York State, will I be taxed differently on that pension if I'm not living in New York then?
Okay,
Thank you.
Each state has its own requirements. New York State will never tax you as a New York State, if you're a New York State retiree, okay? So, but let's say that you go to Pennsylvania or some of the other, South Carolina, they may tax you on part of your pension plan. So each state has its own rules. Under New York State law, you will be completely tax-free. But what you have to say to yourself, okay, let's say I pay $1,000 in taxes to go to South Carolina. Is it
Right.
worth it to leave New York State for $1,000? Only you can say, right?
Yeah, and then
And that's part of what we do. We can tell you what each state will
and then
tax
you want to be careful of the health insurance if you get it through your employer, your former employer that you retired, that it's portable to the other state that you moved to.
Well, and that's true too. That's true. Okay, we don't have any more texts, right?
Nope, that's it.
Okay, let's kind of go down this laundry list here. Kids between the ages of 19 and 24 that are full-time college students are probably your dependent, and you're going to get the education credit. So that's something to look at. These are 11-day tips. Itemize if you can, and for sure, itemize if you can on New York State, because New York State and adjustments, moving expense adjustments and things of that nature are allowable on New York State and not on the federal. If you worked at another state but you live here, do the Form 112R to get a credit for taxes paid to another state. We addressed that this afternoon, right?
Yep.
Nursing home credit, big deal, right, Deb?
Oh, yeah. That's the New York State assessment credit. And so New York State, the nursing homes will charge you the 6%, and you want to make sure that you do the credit. It's a refundable credit on New York State,
So
but if you don't do
you're
it, you won't get the money.
a private pay patient, or you have a family member, private pay patient, the state of New York is assessing that nursing home 6% for your loved one to be in there. You get a credit for that by doing a 258.
Right.
Long-term care insurance is not only an itemized deduction, but a credit on New York State,
And it carries forward.
right? Make sure if you got a small business and you think, oh, I've lost money, I'm not going to mess with it, it's deductible in the federal and New York State. Alimony is taxable unless you got a 2019 divorce, but it's still tax deductible on the state.
You know what? I wanted to say something about alimony. No longer do women or men who get alimony divorce decrees that took place this year have to declare it. So a lot of those people who had to declare alimony couldn't get earned income credit because their income was too high. But now those people don't have to declare their alimony, so they should go get a job if they have a kid, and they'd have this big, huge credit at their windfall.
But again, if you did have alimony, which isn't deductible on a 2019 divorce, It is deductible in New York State, right?
For those paying it,
Those
yes.
paying it. Electric vehicle credits are still available on certain vehicles. Don't forget the earned income credit, like Tiff says, even if you don't have children, when you're doing your 2019 return, if you have wages, take a look at that. Don't overlook the entire retirement savers contribution credit. By putting money into your IRA, you might be able to qualify for that credit, which is 50% of what you put in, which is effectively 50%. It's like getting 50% in your money. Let's see.
I was,
Renewable credit.
Oh, sorry. I took a call yesterday, and there was a client who makes self-employment of $5,000. She has no kids. I said, you might qualify for the earned income credit. Frank is telling me to go fast.
Education credits on the federal and New York State are deductible. Credits for payroll. Don't forget, if you have employees, you can get credits for PPP, and you can get credits for putting putting money in the employee pension deferral thing. So there's all kinds of credits. If you need help, call EG Tax. Our phone number is 632-7886. Go to our website at egtax.com. Until next week, I'm Esther Goulias, the tax lady from EG Tax, Christopher Fabian, Tiffany Fabian. God bless you. Happy 4th.